Hi everyone, this is Gianni DePoce here for TheoTRADE, and today is the 9th of January 2024, and I wanted to run through some charts with you as we've been doing, starting off with a couple of currency charts against the US dollar, because I think we're entering a very important time where we could actually see a shift in some macro flows in the sense that stocks could start rallying with the US dollar. So let's start off by looking at the dollar against the Japanese yen, trying to get a little bit of a rebound here. We came back up last week on Friday to retest former support turn resistance and formed a little bit of a lower high here. Now, obviously, the longer term trend remains up. And to be honest, I'm not as bearish on the yen as I am against the euro. And, it's important to understand when you look at the dollar basket or the dollar index in the breakdown of the basket that comprises that index, that the Japanese yen is only around 13% of the dollar basket. In comparison, the euro is significantly higher and represents over or around 57% of that basket. So, I'm kind of picturing a scenario now where you could see the yen actually appreciate against the dollar. In other words, dollar yen currency pair could decline, but we actually have a situation where the dollar index rises because I'm still a bull on the dollar against the euro. So the big thing for me here is that as long as the dollar yen is below, 146, 148, we have to be cautious with respect to the upside and could see some significantly more downside in a short period of time in the coming weeks and months. So let's go ahead and take a look at the euro. The euro is consolidating its recent losses. I think the high that we formed here back at the end of 2023 with this case of bearish divergence in the RSI indicator does point to some momentum exhaustion on the upside. And as a rule, consolidations of losses are bearish price action. And, stock markets have been holding up pretty well. Yes, we had a Santa Claus rally period that returned negative numbers. We did not have a Santa Claus rally this year, and that can be ominous, for the outlook for stocks. But considering that we rallied for 9 weeks in a row, I think we need to give it a little bit more leeway in terms of probabilities. You usually don't see stock markets rise, for 5 or 6 weeks in a row, let alone 9. So I think asking for a 10th week in terms of a rally in stocks would have been a bit much. But, we saw the dollar rebound during the Santa Claus rally, and we're holding up, relatively okay in light of the rebound of the dollar, which leads me to believe that we could be entering a situation where stocks do indeed rally with the dollar. So that being said, let's go ahead and jump over to the indices, starting off with the Nasdaq, which continues to lead to the upside on a percentage basis. We had the Nasdaq, the S&P, and the Dow all hit new all-time highs in the last couple of weeks, which is bullish price action in of itself. New all-time highs are bullish. I know there's this obsession with buying low and selling high, but there also is a really good time-tested strategy to buy high and sell higher. And, as John Maynard Keynes said, for all, of his faults and misinterpretations of what he may have written, markets can stay irrational longer than you can stay solvent. So I think it's important to trade in the direction of the underlying trend, and in stocks, it remains to the upside. Looks like we just formed another higher low in the Nasdaq and in the S&P. So this all bodes well with respect to the bullish case, and we're still seeing sectors like tech and semiconductors outperform to the upside. That is all very encouraging. If we take a look at the Dow Jones, it is lagging behind here and not leading to the upside, which is good for the bulls. I mean, eventually, I think we will see the Dow make a new all-time high again. I think we want to see it make a new all-time high again. But for me, in the immediate term, it's more important that we see tech lead to the upside. I'm also increasingly interested in the small cap space. Looking at the Russell 2000 here, I'm actually going to zoom out and highlight this, nearly 2-year long rounding bottom formation, and definitely falls into the category of bigger the base, the higher the space. And if we really start to clear and close above, this 2030, 2050 mark in the Russell 2000, I think we have to favor the upside. And perhaps a scenario where we catch up, we see the Russell 2000 catch up to the other indices. And, once upon a time, it was the case that small cap stocks would outperform during dollar strength. Now, we haven't really seen that correlation, that historical correlation pan out in recent years. That is in the last, 2 to 3 years. But, if you go back and look at the historical correlations, that was the case. And it comes down to foreign exchange risk. The small cap stocks don't have as much international business as large cap uh, companies that are, part of the S&P 500, for example. So they don't have to worry about currency fluctuations and, an appreciating dollar decreasing their foreign income like large cap stocks have to. So as I lay out my generally bullish thesis for the dollar, I am going to be keeping a close eye on the Russell 2000 here to see if we can start to see another round of outperformance, or I should say a new round of outperformance by the Russell 2000 against the its large cap counterparts. And I think that would bode well for the overall health of the equity market, generally speaking. So I want to look at a couple stocks. We've been looking at some of these AI names, IoT, Samsara. We called this out in chat room. We were able to get in on this one on the pullback and a retest of former resistance turn support. So we solidified a higher low here, getting a nice bid. A lot of the stocks that I think are ripe for big moves in the coming weeks and months are these heavily shorted names. And this is a good example of that. Samsara has a really high short interest. We've been keeping an eye on C3.ai. Didn't get initially whipsawed out of this position, but I'm keen on re-entering it due to its relationship with artificial intelligence and its high short interest. But another stock that's on my radar that we're watching is Celsius. This has a really high short interest, a really good history of experiencing big price moves to the upside. So we're keeping a close eye on this one as well. And I think that if we see stocks start to take out and make new highs in the coming days and weeks, that a lot of these heavily shorted names will get squeezed and rip to the upside. Another stock that we've had on the books for quite some time that is breaking out to new multi-month highs is CrowdStrike Holdings. This is a cybersecurity company, looking really bullish as a rule. New highs are bullish, so this is really good to see. Spent a couple weeks consolidating, and we've been in this one for a few weeks now, and it's a really good example of letting your winners run. And so we reduced our long exposure after it satisfied our initial upside objective, and have just been moving our stop losses up incrementally beneath key levels of support to continue managing risk. And it is so important to do that when you are letting your winners run. Just to tie up some loose ends here, let's take a look at cryptocurrencies. Bitcoin rallied to a new multi-month high yesterday and came within a couple hundred points of our upside target in the $48,000-$50,000 area. So, we need to start exercising a little bit of caution here, especially after the impressive run it's had. We still have some exposure to the crypto sector through some mining stocks. Ethereum still consolidating near the highs. I'm a little bit more constructive on Ethereum than I am on Bitcoin right now. But overall, I think stocks are still poised for some upside. I think we're still in a risk-on environment, but themes like healthcare, like we've been talking about, continue to show their strength. And you also had financials as one of the top performing sectors in the back half of 2023, which is not something you see in an environment that's about to turn bearish. So those are all the charts that I wanted to review with you today. The best place to get all of our updates is in the TheoTRADE member chat room. Look forward to seeing you there. And until next time, take care.